Welcome again. It's Stan Heller from Lethbridge, Alberta, and I'm going to share some thoughts and ideas about bottom fishing for value and some additional research provided by Michael Bryden, a subscriber from Ottawa, longtime subscriber and a tremendous contributor to our Tuesday Q&A in Canada, and very much appreciated. He's put together some really good stuff. So I was desperate to get that on today, and so sorry we had such a rocky start, but let's get going. So bottom fishing for value, the concept of value investing is pretty simple. It's buy those quality stocks when they are available at cheaper valuation. So it's really the practice of buying a stock when it has seen a significant price decline due to temporary factors that have affected the overall market. And we've seen that with our Canadian and really our North American and our European overseas markets, Australia, we've seen that. Markets have really fallen sharply. It could also be due to just a temporary decline in the sector or industry group. Maybe, as we're seeing with the semiconductors right now, shortage of supply, and that sector is really struggling. Nvidia and AMD and others, you've seen it, have really struggled. So over, so the specific asset or stock itself could be having some issues. We're seeing that in Canada with New Flyer Industries. It's a bit of a supply side issue, and the stock price has just plummeted. So we want to be able to go in and buy quality stocks when they're cheaper, but also they do need to be quality. They've got to have those redeeming qualities of relative value, relative safety, and they should be rising in price when we go ahead to buy them. And we buy them at these low prices with a view to profit over time when other investors realize the stock's true value during the market's recovery and a return to more sort of normal market conditions. We may be a long way from that, but I agree with David. We could get a little bit of a bounce early this week, but there is resistance close overhead, and the geopolitical concerns are still out there. So as I suggested even last month, I think it's a time to either, stay on the sidelines or buy small and use tight stops. Don't get caught. Don't get like a deer in the headlights and not be able to take any action. But I certainly think, and I think we're due for a little bit of a bounce. The buy-sell ratio in all of our markets is extremely low. So buying undervalued stocks brings in a good margin of safety, and it makes it a successful strategy, especially I think for longer-term investors. Although certainly the swing traders can profit from a deeply discounted stock that you're able to buy just as it's starting to make a recovery. Okay, I see some people now on the chat can barely hear me. I'm going to speak up as loud as I can. Hopefully that'll help. You may have to turn your speakers up for now. Yeah, lots of people are saying loud and clear, at least Tom is. So I'm just going to keep going. So bottom fishing for value, we've got some strategies here to show you, and it can really be a successful strategy for the long term. But I think even for the short term, it really helps generate meaningful returns while containing the risk because you're really buying at just the right time. So bottom fishing, number one example, you go confidently bottom fishing for value when the buy-sell ratio and the MTI are oversold. And this is universal in all our VectorVest markets. When the buy-sell ratio is below 0.20 and near or below 0.20, and the MTI is near or below 0.60, we're in an oversold condition, searching for that market bottom and looking for that primary wave perhaps to get back in, and at least in a stepping fashion, not jumping in with both feet, but just sort of again playing a little bit defensive, small ball buy a few shares of strong stocks that are beaten down. Number two, investing in quality, high relative value, relative safety stocks that are undervalued by 25% or more. And this is something that Michael came up with from his readings of Benjamin Graham. And it's got a really cool search to help us out with that. So I'm going to be showing you that. And three, buying stocks in top RT sectors and industries such as petroleum and chemical fertilizers has been in North America have been just tremendous. I mean, if you've done nothing else but hold on to your petroleum stocks or enter into petroleum and the chemical fertilizers, you've really done very well and hedged against some of the other sectors and industries that are not doing so well, and that includes most of them outside of petroleum and chemical fertilizers. So there's lots of ways. These are just examples. So where to look in Canada? Of course, we can look at the stock viewer. The top 100 stocks in the stock viewer will provide some great opportunities. Look for stocks that have those high relative value, relative safety scores, but maybe the RT is not as strong. Sector and industry viewers, terrific source of great stock ideas. And again, looking for value. I wrote in my essay this Friday about Enbridge, for example. I think a lot of North Americans certainly, and maybe others, are aware of Enbridge and 6% dividend yield. And again, blockbuster earnings. You find it in the sector and industry viewers. When you look at watch lists in Canada, there's the TSX 60 and the TSX Composite Index. That's in the TSX folder. And then we have capped indices folder for the financials. Those are certainly beaten down, some of them. And utilities have been beaten down as well and paying really good, strong dividend yields. We have special watch lists in Canada. We have the Master Retirement Watch List, a very strong watch list. The WOW dividends, the Canadian Depository Receipts, where Canadians can buy really outstanding quality U.S. stocks, but my goodness, have they ever been beaten down, especially the technology stocks, Amazon, Microsoft, NVIDIA, and others. Well, we can buy them on sale and in Canadian currency through the CDR watch list. DRIPS is another watch list that's excellent. And then, of course, there's searches, conservative and retirement. So very similar story on the U.S. side. You can see I've put together some lists of ideas here, but pretty much the same situation in the U.S. Looking for the beaten down stocks that have a high relative value score and a high relative safety score will get you some really good results. All right. So how under or overvalued is your stock? This is something I thought I would share, and really I have to say the idea came to me from Michael and the research that he's done and the search that I'm going to show you. But it's just a way that you can add a custom field into the stock viewer, and at a glance you can see the price divided by value in a percent, so times 100 minus 100, and immediately I can see in this example tourmaline oil is 18% undervalued. There's $72 price of the stock, $87 value. It's about 18% undervalued, and you can go through the stock viewer and any of your watch list viewers and add this custom field, and I'll show you how to do it right here. You go to the Tools tab, you select the Custom Field Builder, step number 2. That opens up this field here, or this new menu, and you'll just start by clicking on Fields. Well, you could start with a bracket over here, and then click on the Fields, Price, and then there's your divide sign, and then divide by value. So you add the value again from the Fields button, and there's the multiplication button right here, times 100 minus 100. And then once you've got it all set up, and it'll just fill in the field name for you, click on Validate, And if it's validate successfully, save your changes. All right, so the tip is you can add any custom field to your searches. So this could be on a search as a criteria, to the stock and watch list viewers as an indicator, such as I'm showing up at the top here, and as a parameter on your graph. So you can also add this under parameters, my custom fields, and then there's your parameter. So you can right click on any stock, choose layout from the new menu, and in the layout menu, which is right here in the middle, select your new custom field from my custom fields section. And so here it is here in the field list. It would be over here at the left under my custom fields, and you highlight it and then click on the arrow, the right arrow, to move it into your layout, and you can use the up and down arrows to position it exactly where you want it. So it's under my custom fields, and then just right click on the arrow, move it over, and then I use the up arrow to bring it up. All right, let me make sure people are hearing this okay. And does this look like something that is of interest and could be useful to you? Do I need to show anybody how to set up the custom field in the custom field builder, or are you all good? Looking for any comments. Darren says yes. Ed says yes. I'm thinking that's yes, all good. So I don't need to show the custom field. Yep, Ninja, you can use an alias in the custom field. I just kept the formula there, but you could say my value stock finder. You could just type that into the field name. Absolutely. Yep, we can do it. Looks like a great new tool, Marguerite says. No need to customize. There is a field in Unisearch, value divided by price. Yeah, thank you, Bob. All I did is take that value divided by price and just multiplied it times 100 minus the 100 to give me the percent, the percent undervalued or the percent overvalued. So I just thought that was useful. All right, so we're all good. Let's keep going. All right, so this was my essay on Friday, and everybody has access to VectorVest Canada. You can just log in into VectorVest Canada and read my weekly essays if you like. And this one was about searching for value and passive income. The key points here is I wanted to change the relative safety from 1 to 1.2. This step reduces risk by returning only stocks with very good to excellent earnings consistency and predictability. And then I wanted to change the dividend yield safety growth, that YSG, again to 1.20 from 1. And this step ensures only stocks with the best combination of dividend yield, safety, and growth are going to be considered. And I wanted as a minimum 2% dividend yield. That's the minimum income, especially in this period of high inflation. So you go ahead and make the changes to this search, which is in our VectorVest software for us. So it's an easy one to change the search. And again, that search is VST plus YSG bottom fishers. VST plus YSG bottom fishers. It's in the searches retirement folder. I know both Canada and US, and I believe our other countries as well. All right, so it's easy to make that change, and then you can come in and have a look at the types of stocks that you're finding with this search. If I come up to the searches folder, and let's see what I've got going on here. That changed things again. Boy, oh boy, I'll tell you. Live TV, right? All right. So here's that VST bottom fishers with values. So I've modified it. I've changed the relative safety from 1 to 1.2 in the value button. And I just used the custom value. To do that, you just click on it and just type in the value that you prefer. And yield safety growth, the YSG, I changed to 1.2 right here as well. and I added the dividend yield. So this is essentially the same search as you'll find in the retirement folder. It's called VST plus YSG bottom fishers, and you can run that search. I'm going to run it as of today. So I just got to bring my date calendar forward to today. There it is. And these are the types of stocks that you're going to find in that search. You're going to find Bank of Montreal, dividend yield 3.95, relative timing 0.87, so we know it's a beaten down stock. Royal Bank, same situation. Parex, very much the same. And then we get into some stocks that are holding up fairly well, but still meet the criteria of this bottom fishing search. Ken, I believe I know the search is there in the US software as well, and you can make those changes as well. All right. And then some of the other searches that I pulled out as really strong searches. Rising business sectors with RS. This is again from the retirement folder. And for example, here's some of the stocks that are showing up here. Even a CDR, Costco, showing up here. And you can see the relative safety scores, all very, very good. And of course, if you run it back, I'll run it back to the beginning of the year, which is what Michael did with some of his testing, and run the search as of 12/31. That basically gives you a year-to-date situation here. These would be the stocks that would be returned. Now, a lot of these are the petroleum stocks. You can see that. I've got the industry group right up the front here. But you know what? This petroleum stocks were on fire. And so it wasn't all that bad that we had a lot of petroleum. You just wouldn't, load up with 6, 8, 10 of them. You might go with 2, 3, 4, or possibly even 5, because it was such a strong sector. There's Enbridge, for example, right in there. There's Freehold Realty. My goodness, 6% dividend yields. And then you've got some potential growth coming with it as well, 45% to sort of the end of April. Let's just see if it continued this last week, which was such a volatile week, or did we get killed? Well, you know what? These stocks went up even last week. They went from 45% average return to 54. So rising industries in a beaten down market like we've seen is a pretty good strategy. Don's Dividend Dandies, dividend yield growing by 10% or more. That can be a good one at times as well. They're not all going to be those substantial returns like that, but again, a lot of petroleum stock showing up. Here's another one in the retirement folder, high VST plus YSG, just on its own. And you can see how those did, 33%. So that I'm just giving you the idea that these high relative value stocks, these high relative safety stocks, lower RT scores. You can look at the charts and pick the ones that look the best. Here's use the rules long. I'm getting ahead of myself. I'll show those in a minute. All right. So there's the bottom fishers with values. So so if I ran that search on 12/31, you're still getting some great companies, but they've really been beaten down and they didn't come up all that well. They outperformed the market by about 13%, but some of the other strategies might even do better, as we see. All right, so there's rising business sectors, great results. It's in the long-term winners folder. Didn't have to change it at all. All right, so I want to get on to the research that Michael Bryden did for us, value investing research and insights from Michael out of Ottawa. And he writes, just following up on your weekly essay, he called it a missive, actually. My weekly missive supporting value investing, also purported by its godfather himself, the godfather of value investing, Benjamin Graham. And while Graham identified 7 key criteria, and you see them over here, VectorVest has likely amalgamated several of these criteria into its proprietary indicators of relative safety and relative value, and that is certainly true. Warren Buffett is another successful investor using his version of value investing, although there comes a time when each investor, with their respective approach, must decide which stocks to pick and then run the course. And as you know, I often do deep dives in my searches looking for persistent trends across various fundamental and technical indicators, as I prefer momentum stocks with good fundamentals, and I might temper those with seasonality considerations. So after several readings about Graham, I crafted a shorter version in VectorVest to quickly search for watch list prospects, and the search I'm going to show you in a minute is pretty fantastic. And luckily, Dr. Toledo, our founder's excellent formulation of value, helps in applying Graham's safety factor of price, trading 25% or more below value. All right. I have attached several pictures showing my short version search, along with some variations to Graham's safety factor. That's the 25% price is 25% below value in VectorVest. That is what Michael has identified as Benjamin Graham's safety factor, and to show how, and he's done some back testing and forward testing to show how they've fared since the beginning of the year, just year to date. All right. So Graham focused on quality stocks showing growth, but currently trading below their intrinsic or theoretical value by at least 25%. Graham also preferred stocks growing earnings over several years, but for my purpose, I focused on more recent growth over the past year and quarters, given our turbulent times, as well as VectorVest limited lines in searches. You don't want to go back with 30 lines of search. So Michael has set it up looking at the more recent quarters and the past year. So I also included sales performance in the same period, and I'm going to show you a graph layout that Michael uses that's pretty fantastic on sales and earnings and net profit margin and other factors. I sorted the prospects by relative safety times growth rate, GRT, times that relative timing in descending order to prioritize financial strength, growth, and momentum. So really a strong sort, very, very valuable. The results using Graham's safety factor of 25% under value, while not thoroughly tested, did show excellent returns from the beginning of the year compared to the broader Canadian market's decline, which was 9% at the time he wrote me the email just a week ago, I believe it was. A backtest of the top 10 stocks from the beginning of the year, showing on the next slide, increased 38%. So that's running the search on a recent date and then backtesting it back to the beginning of the year. So this is what it did. Whoop. This is what it did from there. So this was the search. These are the stocks that you find, but the backtest took the stocks from today and tested them from a few months ago at the beginning of the year, and that returned 38%. So it does show the efficacy of the stocks that are showing up now in the search, that they've had some strong gains over the course of the 4 months. And then Michael created this custom field. You'll notice there's stock value times 0.75. This is how he's able to create that price divided by value buffer. So using the custom field builder, just going in and choosing value times 0.75 is how Michael was able to achieve this line for the price split adjusted less than 25% basically of the value. So undervalued by at least 25%. Pretty cool. This part of the webinar is being recorded, Andre. Unfortunately, with all the issues we had earlier, I wasn't able to record David's presentation, but this one is being recorded and you'll get the slides for David's presentation and my own presentation as well. All right, so this is the custom field builder again. Just as I showed in the previous slide, there's the menu that comes up, and basically you're coming into fields, selecting value, select the multiplication button here, the star, and type in 0.75, validate it, save it, and you've got a custom field that you can put into the search. All right, so backtest of the top 10 stocks from the beginning of the year. So today's top 10 stocks backtested to the beginning of the year. We also know that these are biased results, taking the best stocks of today, looking backward at their stellar rises. So he backtested the search to the beginning of the year, running the search on January 4th, and used the top stocks at that point and did a quick test to the last day, resulting in a cumulative gain of 28%. And that was to April 29th. So definitely some drop off there, but it's a lower result, but with a few losers in the top 10, the search still outperformed the broader CA market. I mean, absolutely killed it from that point of view. So pretty darn good. And we can see those results here. So 28%, 1, 2, 3 losers. Gildan was the biggest loser, but very good. And you'll notice stock sales, yearly sales, from the parameters, operator greater than equal to, and then just choosing 13 weeks. And I'm just going to show that because sometimes it trips subscribers up getting that custom field in there, or at least the custom date and time. So let me just go in there and if I can find it again. All right. So I'm just going to go back to okay, so this is Michael's original search here. And you can use this custom field as I've done with other searches, just add it as a search line in other searches, this value times 0.75. But here's something I want to show you then. So stock sales, yearly sales in millions, that's under stocks, sales, market cap, sales, yearly sales in millions. And then of course the greater than or equal to operator. And then here is where I want you to pay attention because this trips up people from time to time. And I'll just left click in the value box. And instead of choosing custom value where you type in a numerical value, you want to choose custom date and value. Left click on it and you get a little window that looks like this. If I can stretch it out a bit. And under the date here at the top, we can just go in and select 13 weeks. You can also do a custom date and time if you want, but 13 weeks is right there. And of course I chose 10. So 13 weeks is a quarter. And then you want to make sure on your indicator that we go stocks, sales, market cap. And there's the sales, yearly sales in millions. So I just click that, click OK. And then I do the same for the 26 weeks. So half a year. And then 52 weeks is a full year, and that's for stock sales. And then I do it again for the stock earnings per share. Growth rates, pretty strict here on the growth rate, greater than or equal to 20% per year. So that's a really strong earnings growth rate. And then a recommendation, we don't want any sell rated stocks. They got to be either a hold or a buy. So this is the do not equal sign. And then Michael added for one of his back tests, the dividend paid. So I've put it in here and it's just greater than 52 weeks ago. stock dividend. All right. Oh, Michael says I have to stagger the times in the leftmost column for earnings per share and sales. Let me have a look here, Michael. I'll just, maybe I missed that. You know what? I did. Ah, great. Thank you for noticing that. Oh my goodness, that'll make a big difference. So in the time of search, we're going to just kind of match up a little bit with the times here. So let me just go back in here. All right. So in this one, we're going to go 13 weeks out. So that's the time of search is 13 weeks ago. And then the time of search, we're going to go 26 weeks ago, I believe it is. Okay, and then we do the same for the earnings. So we've got the 13 weeks ago, and then 13 weeks ago over here at the left. My goodness, I'm not sure how I missed that. Thank goodness, Michael, you noticed it. So then we have the 26 weeks, and we go 26 weeks right over here. Very easy to do. 13 and 26. I think that's got it. Yeah, Michael says another learning lesson on the fly. You know what? I'm glad you mentioned that, and I'm actually glad I made that mistake because I think sometimes we learn more from our mistakes. I won't forget it again to look more closely over here. But this is pretty cool. And then we run the search. Let's see, Michael's been running it on the first day of the year. That's January 4th. So let's just run it on January 4th. This is the one with the dividends. So it's got a dividend greater than 52 weeks ago, the stock dividend. So in other words, they've increased their dividend during the year. So I can run the search. I'm just, and we don't get very many stocks, but we get a good group of stocks, and you can recognize a lot of the names. And again, 31% if I carried it forward through to today. And listen, from the emails I've been getting and so on, from what I've been seeing, most of us would be very happy with 30% or 20% gain in our portfolio over this period. And of course, I think you'll do better looking at the graphs and managing your portfolio that way. All right, so this is what Michael got to April 29th. And then Michael wanted to just see what would happen if you reduced Graham's safety factor to 10% below price. So price is now 10% below value as a minimum. And it did result in a drop in overall results to about 21% or 22% versus 28% with the 25% safety factor. So that 25%, when your stock is undervalued by 25%, that is pretty cool. That is a great way to bottom fish for value. So really want to say thank you to Michael for really setting this out for us, right? It's a gift for all of us. So I really appreciate it. And it appears that Graham's approach with that safety factor, that low price to value, that valuation, likely provides a buffer for promising stocks to both grow and possibly weather difficult market periods. And listen, if you tune into BNN, and I do quite often during the day, most analysts are coming on now and saying there's been a shift from growth stocks and speculative stocks to stocks that have a very favorable valuation. And what they're talking about is a very favorable price to value. So this is very timely. And a further observation from my years of backtesting, the stocks at the top of the search list, depending upon the sort criteria, usually perform better and show fewer losers. So Michael is using that relative safety times the GRT times RT descending as a strong sort. So here's that 10% safety factor, the price value buffer. So that's a custom field again that you would create. And the results are still very good. You're still buying undervalued stocks, but you're getting a little less on the return side and one more loser. Not too bad. All right. So then here's where he talks about Graham being a believer in dividend paying stocks. So he included one variation with that simple addition of the recent dividend being higher than 12 months ago. So very easy to set that up, as you can see from the search. It's just this one line down here at the bottom. So I showed you how to use the custom date and time. You would do the same for the dividend. And if you're an income investor, you want to see that dividend growth. And this is only going to find stocks that have grown their dividend in the last 12 months. And still a very good return, 25%, plus you've got income. All right. Yeah. Amin is saying, Stan, hopefully you will include the newly revised slide for Michael's search when you send out the stocks. Thank you for that reminder. I'll change my slide before they go out on Monday. The slides will be sent to you by VectorVest on Monday. There's so many people that follow our international online forum that I just can't send them out on my own anymore. It takes me hours, where VectorVest can do it with their system in, well, probably still hours, but not as much time as me. So you'll get them on Monday. Yeah, and Michael's just commenting, Michael from Ottawa again, Michael Bryden, lots of variations, but that one line checking for a dividend ensures only dividend paying stocks are returned. Yeah, that's awesome. And it does guarantee you're getting at least a decent dividend growth stock. So that's important as well. And it does ensure that you're getting income with the stocks. So just one line, but it's an important one. So awesome. Oh, and Ed Subak, who presents to the forum on thematic ETFs, just commented there's also a shift from growth ETFs to value ETFs. And he says, no surprise. Yeah, so Richard, the reason we're putting in these in the time of search 13 weeks ago is because the line above it already shows that 13-week change. So then we go at the time of search, it's as if we're running it 13 weeks ago. And so now there we go, the 26 weeks. So it just resets the date of the search for us without doing the search that way. I mean, I started doing some testing with the U.S. stocks, and we need to do quite a bit more. And I'd appreciate any feedback from our friends in the U.S. and Australia, UK, and Europe. When you try this search and setup, I'd be very surprised if it doesn't work, about the same. But you know what? I've been surprised before. Some of our best searches in Canada don't always get the same results in the US. So that is certainly true. So just want to show you the setup, and you can do some playing around on yours. If you're in the US and want to try some different setups, you can certainly do that as well. All right. So there's that 25% buffer again with the 52-week dividend increase. And here's the graph setup. So you'll get this in the slides. So right at a glance, you've got the 3 and 8 EMA moving averages running across the top with candles. You've got support and resistance that you can toggle on and off if things are getting a little bit busy. You've got a 40-period moving average in the dark blue. Value running across the top. So again, you know that Paramount is strongly undervalued. And then this is a 1-year graph, and we see the sales increasing all the way to the right edge. Sales growth quite strong, falling a little bit at the end here, but still very, very strong. The net profit margin, the markup for the company, very strong, an indicator that they've got a good margin for their business. Earnings per share rising all the way to the right edge. That's an important one. Earnings growth rate all the way to the right edge. There's that dividend increase for Paramount. Looks like they've actually made 2 increases just in the last 12 months. And there's the dividend growth rate. You can see that with the increasing dividend, the dividend growth rate is increasing as well. Yeah, and that was a quick test. So the stocks chosen were held for the duration of the test. That's true, and you wouldn't necessarily do that. You might decide to take profit up here at the top, right here, for example, and then come back in when it starts to take off again. You could certainly do that. But look at the buy ratings. The buy rating is right across the page, even in this terrible market condition. All right, so I just want to show you that setup here really quick, and I'll do it in the US side, doesn't matter. Let's just, so again, some great watch lists here in the US market to look for these types of stocks. As soon as I find where I'm at here, there's the viewers tab. Okay. So for example, under S&P watch lists, the S&P 100, very strong list, of course. So you could look for stocks there. And I've given you a list of some of the other watch lists that are quite strong. So let's just graph them all. I'm not going to graph them all, but I'll just show you a couple here. So first off, it's cool that in VectorVest, it's so easy to toggle the price on and off. So I'm toggling price on and off. It's pretty much following the 3-period moving average. The 3 is really almost a proxy for price. And then the 8 in red is trailing it here. So I'm going to toggle price off, and now you can see the green 3 EMA moving average and the red 8 EMA moving average. And in VectorVest, the way we create a moving average is just right-click into the box. Here it's price, add moving average, go down to exponential, and we're going to choose 10. And then we use the arrows down below at the bottom of the panel to set it up for 8 or whatever we would like. If we want to change the colors, we just right-click on EMA 8 here, for example, change the style. It opens up a little drop-down menu for me. And I thought that was red, but it's kind of a pink, so I'll change it to red. And I've got the thickness a little thicker just so you can see it. Normally you would use the medium or the light size here, small size. I've got the medium thickness. Click OK. And this is what we've got. Okay. All right, so that's that. And there's the 40-period moving average as the default moving average in VectorVest. So Michael has continued to use that, and he's used a blue line. So there it is there. And you can see the waves of the price action very nicely with these 3 moving averages. And you can see all the other indicators. So if you're adding sales, for example, just know when we go to add parameter, sales is going to be under sales market cap. And then under capital appreciation, you're going to have basic VectorVest indicators, RS, RV, and others, the growth rate, for example. So you'll add them. And again, when you click on them, let's just add one here. Let's add the dividend YSG, just to show. Dividend analysis, YSG. When I left click on it, it's going to drop it down to the bottom. And then I have to click to activate it. And there it is right there. All right. We've got volume, earnings per share, really a nice graph layout. And then, of course, once you've set it up the way you like it with the colors that you like, and here again, I can toggle support lines and resistance lines. And once you have it the way you like it with all the colors that you like, just come in and choose Save, Modify, layout, click on add new layout, give it a name. You can just call it MB for Michael Bryden, value, whoops, value, there we go, and click OK. And so now you don't have to worry about the colors or anything else. Again, it'll all be set for you. So there's one I had saved earlier, and you can see the colors are all saved for me, including the colors of support and resistance. Folks, listen, I hope this was helpful to you. Thank you, Louis. Says, always trying to make things as simple as possible. Thank you for your idea. Yep, easier to use value divided by price. You could certainly do that. Absolutely. Yeah. Yeah, Edward says, great system. Look forward to seeing it again on YouTube. Yeah, this part of the presentation should be available on YouTube shortly after. Somebody was asking about selling, and Michael responded, selling depends on your investing plan, your time horizon for the investment, and your risk tolerance. Tom, thank you from Burlington, says it was fantastic as always, Stan. And again, I apologize for that earlier trouble. I got to tell you, my knowledge of technology is so bad, but honest to goodness, we test this out and everything was systems go, just like every other week. But it seems like every once in a while we have a little issue. This was one of the worst today. Bob, thank you. Bob says provides a new sense of confidence when you study the research that Michael has done and the results that he's getting with these Benjamin Graham indicators, which is pretty cool. Pretty cool. Listen, for those of you with time, let me just very quickly just let you know again, there's risk in investing, and everything you saw and heard today is for educational purposes. But just know we've had some challenges in the market. And by the way, just again, you will get the slides in an email, typically Monday afternoon, and I'll remember to update those slides for you. So it's all good to go. And recording the replay, at least of this part, will be on YouTube. David, you'll have the slides, but I just wasn't able to record that section because we just didn't know what was happening with the sound. And thank goodness Joey from North Carolina was quick to come on and help me. But it was challenging because what happened is we had a Windows update that I didn't think would affect our studio setups, and guess what? It affected everything. So yeah, lots of accolades coming in for Michael, and yeah, and Lou says well worth the wait, so that's very much appreciated. I really appreciate the patience. But just so you know, and Mike Simonato's contributing to the weekend blog, the VectorVest Canada blog, always great information with a different perspective and very useful. But here's what I wanted to show you with the color guards. I mean, it's all pretty bearish, and you can see the 1 month since our last meeting in April 1st. The US market overall down 9.4%, Canada down 7%, UK and Europe down 5, almost 6%, and Australia, the best performer, down 4%, but lots of red. So be cautious out there, and be aware of these top industry groups. I mean, if there's money to be made the last little while, it's been at these top industry groups. No question about it. And Glenn Tompkins has done a wonderful strategy of the week, finding sector strength. Make sure you watch it. And somebody asked, can I attend the Canadian Q&A webinars? Absolutely. Just open your VectorVest Canada software and register, and you can join us. We've got a great community every Tuesday at 12:30 Eastern. And there's the top 10 US sectors, petroleum dominating. All right, so there it is. And there's that resistance that I was talking about right here in Canada, right here. And of course, there's our 65-day moving average. And if you draw your trend line across the tops, you know, if you're being really cautious and conservative, you won't get too far into adding new positions until we get above this 65-day moving average and possibly even the trend line. All right. Because but folks, we are right here in the emotional market cycle. We're very close to the capitulation phase. In Canada, the buy-sell ratio 0.10, MTI 0.50, strongly oversold. So we could definitely get a bounce. Bottom fishers, like David said, the Steve Chappell is kind of the VectorVest expert in bottom fishing, and I think these numbers show that we're certainly close to a bottom. U.S. market 0.15 buy-sell ratio, and the MTI 0.49. All right. Thank you, everyone. Very much appreciated. Any questions or hopefully no concerns, 1-888-658-7638. And of course, you can email me at stan.heller@vectorvest.ca. But please be patient. Wait for the slides until Monday. And as far as the recording, I expect that we'll have a recording on YouTube shortly after we're done here. But if it's not there, you know that it's the technical difficulties that cause us the problem. Ken says, where do I sign up for the Q&A? So in Canada, you would just go to the views on the Friday, so May 6th in this case, and right up at the top is our webcast schedule, and it's Canadian Q&A, so VectorVest subscribers only, and you're welcome to join us. You just register here. Canadian members are automatically registered, so that's not an issue there. And on the US side, you would also go to the views on the Friday webcast schedule, and Glenn Tompkins will be doing a Q&A Monday. And I just got to make sure it's normally at 2 o'clock Eastern. Let's just double check so I don't lead anybody astray. And thank you all for sticking with us. And thanks for all the likes, the likes on the webcast. I know the content was excellent. I apologize for the technical difficulties today. Very unexpected, and not very frequent, thank goodness. So actually, yes, 2 o'clock, you can register for Glenn's Q&A since he did the special presentation video, and you can watch the video just by going to the timing tab and click here to watch his excellent video. A different approach to tracking sectors, looking for the most consistent performing sectors. Really cool idea. And Michael's blog, excellent reading. And again, if I go up to the top here, so you just go to www.vectorvest.ca/blog. Okay. All right, folks. Thank you, Ron, for that. I can't tell you, I was like a cat on a hot tin roof. I was so nervous I wasn't going to be able to show you anything today, but I'm so glad David was able to get his presentation in, and thank you all for watching. Michael contributed some just superb information, and I wanted to make sure we all got that, and it looks like we did. So that was all good. So listen, have a great rest of your Saturday and weekend, everyone, wherever you are. It's very much appreciated. And again, thank you so much for the likes in spite of our technical issues today. We really appreciate all that. So thank you, everyone. Have a great rest of your day. Oh, Ken just chats in, greetings to you at Lethbridge, has a niece here. So that's pretty cool. Yeah, and of course, my days when I was an administrator at first the university and then the hospital, I knew just about everybody, Ken. These days, the city is growing and I don't know nearly everybody anymore. Thank you. Great comments on the presentation. So thanks, everyone. Have a great rest of your weekend.